very bullish on the market going forward, except for this one thing. So let's talk about that, right? We're going to dive into the technicals, the macroeconomics, and the fundamentals. And first, let's go ahead and get started with the fundamentals, right? Very bullish, except for this one thing. So S&P 500 fundamentals. Let me make this full screen so we can see the data here. All right. So what we're seeing is S&P 500 earning estimates are turning positive for the first time in 2 years, right? Ooh, market signal, earnings are turning positive. Stocks love earnings, right? Stock prices love better earnings. Estimates bottom somewhere between April and July. That's what we saw, right? This is the path of earnings. Estimates starting to bottom, starting to lift. Very bullish. Q3 2023 estimates are being led by big tech, right? Big mega cap tech, the Magnificent Seven, still leading earnings because they can retain margins, because they can still earn during a recession, because it's technology, right? Plain and simple, it's technology. And what's driving those earnings? Corporate spending, fiscal spending, and a lot of the AI stuff, So fundamentals, good news, right? Good news for the technicals here, right? So we have 4 consecutive green days. Look back when we had, the last time we had 4 consecutive green days, we always had a higher low, right? This is going back to June where markets had a lot of momentum. You have 4 days in a row green, you get a pullback, but you get a higher low. So what am I expecting? Well, we regained the 50-day moving average, right? We haven't had that for a while, so we've now regained it. So maybe we pull back into the to the 50-day moving average, which is also our big support, which is also anchored VWAP from the big Fed meeting from Jackson Hole. That's also anchored VWAP. So 445, 444, probably the higher low here if the bulls can stick it. We'll keep our eye on that. So who's leading this? This rally here? Since Jackson Hole, right? Since Jackson Hole, we have technology, home builders home builders too. Builders, materials and energy, leading since Jackson Hole, right? Since the meeting on August 25th, this is who's leading. Technology. So post Jackson Hole, you're getting investors just more interested in what technology does as rates ease, as we come to the end of the cycle. More builders, right? Building capital allocated towards builders and energy because, I think it's because of fiscal policy, right? Just think of it this way: technology, Inflation Reduction Act. Okay, that's tech. CHIPS Act, that's tech. Infrastructure bill, that's energy and builders, right? And energy is also in Inflation Reduction Act at the same time. So I think this plays into it, right? Let's keep our eye on this going forward. Volatility risks are collapsing. There is an appetite for risk. VIX back at the lows, right? Break under 13. That's pretty strong risk on signal there. That's a strong risk on signal there. Equity credit risk sliding lower. Appetite for risk. What is this? This is triple B spreads, which represents the credit market for the equity credit market, and those keep falling. So the credit risk, as it goes up, you have more credit risk. As it falls, you have no credit risk. So credit risk is coming down, and you can see the divergence between S&P historically, or during this cycle, when credit risk falls, S&P goes higher. Peak. So also we got peak put buying, right? We just had peak put buying, and typically you have, when put buying peaks, it's the put to call ratio. When it peaks, you get the bottom of the market on the trend. You get the bottom of the trend, and the trend rips higher. We saw that back here. It's also, back a little further in history, but when we peaked last time, we trended lower. So the put call ratio trended lower, or there was less puts coming into the market, and we had a giant rally, right? Kind of looks similar. Looks very similar. So keep your eye on that. Peak put buying, bottom of the market, moving higher. Bad news for the macro forces. So here's the bad news. Looking at the macro forces, here is the bad news. Crude is breaking out of a 9-month resistance level. Expect headline inflation to also break out. If you have questions or any comments, leave them on YouTube so I can actually go back on them. They'll get lost on the TikTok algorithm or on the feed. But yeah, this is a big risk right here, right? Oil going higher because that pushes inflation expectations up going forward. So can we still pause? Yes, but the chances of a rate cut go down or further into the back half of the year, and probably until 2024. As long as this rises, you push those, you hold rates higher. You're going to have rates held higher for longer, and no chances of a rate cut unless that comes down. Higher inflation expectations can easily, oh, this is just the next segment anyway. This is the dollar, US dollar, right? Big risk on, risk off signal. This is the big macro force. It is the wrecking ball. Higher inflation expectations can easily trigger the dollar to keep ripping higher. So once we got oil breaking out of that level, that 83.50 level that I've been signaling for the past 6 months, this is the big level. Yields actually eased a little bit, but the dollar ripped higher. And this could be a risk off signal simply because if inflation CPI expectations go up, risks go up, the dollar moves higher. The dollar moved higher the entire time that inflation was chugging up, right? So is this a secular change? Maybe, maybe not, but it is risk off if the dollar continues to break. You have that this area right here, this 105, 106 area. Above that, S&P goes much lower if we break below that level. Keep your eye on that. All right. So the good news on the macro forces. We do have some good news coming into the market. This is a big one. Global liquidity is starting to pick back up. In orange, S&P 500, right? The S&P 500 tracks pretty much one for one for global liquidity. Everybody measures it differently. In green is M2 growth, money growth from the 4 major central banks: Bank of Japan, China, the Fed, and the ECB, European Central Bank. That's moving higher. It literally looks like an uptrend. It's moving higher. It is lagging. I expect it to keep going up. It should be going higher because we're in recession territory, and now rates come lower, rates ease a little bit. You get a little bit of stimulus for your economy to boost your capital markets. We see China doing that as the real estate property market slumps, more liquidity into the system. In red, reserves are climbing. In black, this is the big one, right? This is the big one. Money market fund money parked at the Fed is leaving. Look at that one for one with the S&P. The money market fund is money that's parked at the Fed, right, to collect that interest, is saying, hey, I think this cash can be better off parked somewhere else. Maybe it's equities. So that liquidity is coming back into the market. Good news on policy, right? The good news on Fed policy. Well, we do know that, Powell wants the labor market to cool and housing inflation to come down, growth to stay below trend, right? So what did we get this week in the report? We got GDP growth rate annualized for Q2, so the last quarter, revised down to 2. Well, not really revised down, but came in at 2.1%. So not as strong as we initially thought. And this is not bad news. This is actually good news for rate hikes, right? This is good news for easing policy, for easy policy. Maybe not for a strong economy, but that's not what we're looking for right now. Next, private payrolls missed expectations, right? ADP non-farm payrolls. These were private. They didn't miss expectations, so that's good. What does that say? More room for the Fed to pause. Unemployment ripped higher. More room for the Fed to pause. This is a big one, right? We're almost at that 4% level. This was the biggest uptick for a long time that we've seen, probably during the whole cycle, from 3.5 to 3.8, right? So the unemployment is it's probably one of the most lagging indicators. Now it's ticking up. So now that it's ticking up, the Fed has reason to pause. They know the pipeline, right? In the backdrop, as that data rolls in, we should see unemployment tick up a little more. They can stop, they can ease. Consumers are set to slow down in the second half, further cooling the economy. Why do I say that? The savings rate ticking down, right? Rolling back down. It got up to 4.7%. Now it's back down. Consumers are probably using that cash, right, to pay off credit cards. Who knows what it is? They can't keep it up. The summertime is over. That's where you spend a lot. And now you're back to moderate spending for the consumer. Cooling incomes data, right? The income data actually missed expectations. So incomes are not as strong either as expected. They're coming back down. They're not collapsing, but they are down. Cooling, another reason for the Fed to pause, right? Good news. Here's the good news on the economy. No sign of recession, though. Yes, things are cooling, but there is no sign of recession. Personal spending came in higher than expected. Now, you could say this is good, this is bad, but we do know the consumer spending is down. We do know savings rate is down and incomes are down, they can't keep up the spending unless they create more debt, which they could probably do and keep up, but it's not going to be as strong when the incomes are down, right? It's not going to be as strong. So spending still positive, remains positive. The economy is still expanding. The labor force participation rate, I can never say this correctly. Labor force participation is back to pre-pandemic highs. The economy is still expanding. Cooling jobs growth, but still positive, still expanding. Yes, jobs growth has been cooling, but it's up 2 months in a row and better than expected. It actually might be better than we're actually seeing here because there's a lot of halts on those jobs from the union stuff, right? So these jobs might actually be stronger. We'll see in the pipeline. We'll get more news. We'll report it. But for now, the economy is still expanding. We're still in positive territory for jobs growth, right? What are the top industries adding jobs? Healthcare, social assistance, leisure, hospitality, construction. So that looks like construction, apartment builds, because we know housing. Oh, oops. Because we know houses are not being built that fast. So maybe apartments. Let's see if I can zoom in more there. All right. So construction, probably building of apartments and real estate, whatever it is. Leisure, hospitality, people have been traveling, right? They want to service. They're spending on services. Their retirement age is, a lot of people are retiring. Healthcare, social assistance, up big. Okay. Biggest losers here, transportation and warehousing, where all the inflation is. We'll see later. We'll see a little later. Information also down. I wonder why, because AI can take care of those jobs. We don't need those jobs for information, right? Financial activities. I mean, we'll that's it. Let's just go there. August jobs, 1 month net change. People are still spending. Okay, they're still spending. There's still job growth. Some areas, you have a rolling recession. Business cycle is finally turning up, right? The U.S. Now we got this is the best indicator. This is the most leading economic indicator in the past when it comes to the changing the ship around, when it comes to turning the ship around, right? Strong finish last hour, SPY opening after a long weekend. Yeah, we'll see how that goes. You can if you have any comments you want me to not get lost in the algorithm, throw them on YouTube. We're on YouTube Live also. So U.S. economic activity, manufacturing starting to turn up. You see all these bottoms here. This is every single time that basically this is the business cycle, right? This is the start of the business cycle. Manufacturing has been in recession. If this is the bottom, the economy is going to be very strong, especially in Q4 when we get more fiscal policy, when we get more onshoring, we get more of stimulus from the Inflation Reduction Act, fiscal spending, and the IRA, right? I'm sorry, not the IRA, the CHIPS Act. So if manufacturing turns back up, I mean, you're looking at the business cycle turning back up. Now it comes to, can we solve inflation, or do we stick longer than expected? And that brings us to the bad news, right? Inflation is sticky, as it came in as expected, right? For core, so left-hand side, this is core. Here, I'm sorry, this is a PCE. This is what the Fed is looking at. It did tick up. Core also ticked up barely a little bit, but it came in as expected. We did expect this, but it also means we're stickier than expected. Okay, goods, durable goods, that sector is in disinflation. Or actually, I'm sorry, deflation. So we have progress there, right? But the biggest outliers here, transportation services, and I think a lot of this was oil prices, right? Gasoline prices are up. So we might have sticky inflation. That's what it's looking like in some segments. It may come down, but not as fast as we'd hoped. Does that mean the Fed hikes? I don't think so. I think the economy is, starting to show a lot of progress. But what I do think it means is that they're going to have to hold longer than the market actually expects, okay? Name a country for an edit, okay. No reason to hike, right? So here are the reasons the Fed will not hike as long as we get this picture, as long as we get this, right? There's no wage price spiral. We're not seeing that. Job openings are coming down, so you're getting the labor market in a balance, which is what the Fed wants to see, which is what Jerome Powell talks about all the time. Wage growth is cooling off versus a year ago. So you look at these are year-over-year data. Year-over-year wage growth ticked lower, and it was stuck at 4.4% for a while. Now it ticked lower. That's progress on wage inflation, supply side inflation. That's where it fit into. The month-on-month data was even better. Largest drop in 12 months since August of 2022. Wage inflation, not a problem. The market is pricing in almost no hike. So the bad news is, hey, oil prices are up. Inflation on the headline should be Should be going up a little bit, but and we'll see how long that lasts, but how long that actually lasts. But the market right now is pricing in a 6% chance of a September hike. This was the best pause expectations for the market that we've seen the entire month. So S&P is now pricing that in. Jumping over to the technicals, right? We're still in the uptrend. We're still in the uptrend. There is no sign. We're still moving to the uptrend. I think we're still in a very strong bullish market. 444 is that level, right? 44 is the level that we're looking at here. And everything's in line. Everything's pretty much in line. I mean, you talk about Bitcoin, it's at that 25K level. Oops. Make sure I didn't miss anything. Bitcoin's at that 25K level. There's a lot of indicators. Watch, check this out. I'm going to throw on anchored VWAP. Anchored VWAP from the banking crisis, from when the liquidity all came into when there's a lot of volume for Bitcoin. Okay. Oh my gosh, we're beneath it. So this is terrible. This is bad, right? Warning. Okay, warning shot there. In March, we're now below that level. But if you go from the lows, right? So this is tight. Bitcoin is getting tight. If you go from the lows, then we're above it. So it depends where you anchor the VWAP, right? Where did that volume come in? Well, if you jump on the technicals and actually look, right, turn on that volume, it looks like we actually had the biggest volume spike about right here. Okay. This was the bottom in January, right? Where all that liquidity, we're at that level right now. So we're trying to match it. So Bitcoin is consolidating, still at anchored VWAP, still at the 25K level, with the expectation. And I know the SEC pushed back by 45 days, but you still have grayscale. You never know with the news or the sentiment how things will actually play out. So keeping our eye on that, right? Ethereum, falling wedge, very bullish pattern when it does start to break out, especially in the longest crypto bull market in history, right? This is the longest crypto. Ooh, let me make this a little wider. This is the longest bear market in history. All right. So any other time you buy this late in the bear market, I mean, you're pretty much buying the bottom. Maybe you drop another 10, 20%. Maybe, maybe not, right? The probability is in favor that you're up from here. There are also more long-term holders in Ethereum than there are Bitcoin. We look pretty bad on the daily SMAs, right? If you go to the weekly SMA, well, you're pulling right back into support, which is the 200 weekly moving average. We'll see if we actually find support at that level. But for now, Ethereum, Bitcoin setting up, these are probably the lowest prices you're going to get. If there's one more pullback, it's probably most likely the last pullback. Very likely that's the last pullback as central banks start to print more, right? As China prints, as Brazil prints, as money growth starts to turn up in the fourth quarter, as you get the fiscal stimulus. Also, money growth will turn up globally because a lot of economies are starting to recover. India has the strongest GDP growth as we speak. So you have a lot of that coming online, right? Looking at Tesla. Oh man, Tesla's going lower. They cut prices again. They only cut prices on a couple of the models, right? And that is to grab more market share. They're grabbing more market share. You have full self-driving in the works right now. We don't know if it's going to come today or tomorrow. Last pullback will be in 2024. Chavez, there probably will, if you're talking about crypto, there probably will be another pullback for crypto, but I think we move higher before we get that last pullback. So I'm thinking, just going to Bitcoin really quick. Let's take a look at Bitcoin. You're talking about crypto, right, Chavez? We're doing Q&A, by the way. If you have questions, throw them out there. And then we can go over the rate hikes too. The pause, the data on how when the Fed does pause, that's actually good for markets in this scenario when you're position negative. SPY, link in bio. SPY, please. Yeah, we'll do some SPY stuff. I'll go over SPY. So for Chavez, for Bitcoin, yeah, I think we go back to all-time highs. If the macro is correct, right? If inflation continues to decelerate, just because 1 or 2 months of data, goes up doesn't mean much. Right now, the macro forces are, short term over the next month or two, they're pointing negative, but the macro trend is still lower for those macro forces or for financial conditions to ease, right? We're seeing macro liquidity come in. You're seeing bond volatility, which is very important, which is the haircut to your collateral the haircut to collaterals coming down, which is why that money market fund money is finding its way into capital markets. I think over the next week, we're going to see a consolidation. I'm thinking by Thursday or Friday, we get a breakout in the S&P again. By Thursday, Friday, mathematical, that's just a guess. It means nothing. But just by looking at just by thinking about how the market prices things in, I think, and looking at price, I think we do that. So yes, I think looking forward that Bitcoin does get above these levels. We need to get above 32,000. I think we quickly jump to 3740. Let's say you get a Bitcoin, let's say you get an ETF, right? If you get an ETF, crypto or Bitcoin in general is going probably to 3740, possibly even 50K. It might take 2 months, but it's going to move fast. Okay. It's going to move very fast. And then you're going to have the macro forces maybe turn around where the economy is weakening. At some point, we should be hitting a recession, whether it's 2024 or before that. I expect if price moves too quick, we do start to find some resistance at 48K for Bitcoin. Maybe we do go to all-time highs. I'd say 48K. You have one more pullback, and then that's when the Fed starts printing. That's when the Fed can cut rates. When inflation is back to 2%, and I know people don't believe it will be. Well, looking at the jobs number, looking at the economy cooling, we will get there, right? We're going to get down to 2% inflation at some point. Maybe we don't. If we don't get there, then it comes down to bond yields. So I think we're going to have a quick, like just this consolidation here, especially if you go to the RSI, we should have a big rip higher for crypto at some point, especially if we do get the ETF online. And after that, yeah, there'll probably be one more big pullback. But from here, Chavez, I don't know. I don't know if we get a big pullback. If we do, 22K, right? I'm going to put that. If we do come back down, I think we drop to about 22,000. And then that's it. We capitulate from there. We capitulate at 22,000. That's my estimate. If we do come back down, there's a lot of reasons you could come down. This is a strong level, so I don't see us dropping. So S&P 500, SPY please, S&P 500. Yeah, so S&P 500 technicals, they look really good. Okay, they look really good. We're still in, like I said, we're still in the uptrend. You had a couple days of volume. We're above all the weekly moving averages, the 50, the 100, you get the 50 weekly moving average starting to point higher. So you get, what do you call it? This is when you start to get, don't forget the term. So many things running in my head. It's a technical term, a slope. There you go. You get the slope. So you get the average slope starting to turn up. You're getting that slope turning up and let me make sure this is on a log chart. Yeah, we're on a log chart. Good. So you're getting the slope turn up, right? We could consolidate sideways. Like it's not out of the picture that S&P consolidates between 258 and 238, right? If we get some damaging news or if we get some not so great data going forward. But what do we see? Earnings revised up. That's the thing. Earnings are starting to getting revised up. Technology should lead this rally, right? What is the other VIX? I mean, right now people are stuffed in cash, and as earnings turn up, they're going to get FOMO again. They're going to get FOMO again. And I think we're starting to look like we did back here before we broke over 4,200. So those are the S&P technicals on the weekly chart. You jump over to the daily chart. We're now back above the 50-day moving average, right? We lost it for a while, and now we're back above it. 444 is our current support. 454 is our resistance. Those are the technicals. I mean, there's some other stuff you can look at. You can look at anchored VWAP. You can look at, man, what is the other? I can't even, I'm lost for words right now. This is so bullish. No, I'm just kidding. Anyways, you had 4 days, like we talked about this earlier. We had 4 days in a row of price action green candles. And typically you get a higher low. So every time you get that, you get a higher low. We had it here. And we had it here. Now we're getting the 4 days in a row. I'm expecting we come to 444 next week. Look at next week. There's not really any big data. It's either Fed speak or just purely technicals, purely, how do I say this? Market participants are going to see if they have FOMO or if they have fear. And I think with these EPS estimates going higher, especially in big tech, I think the market is going higher. That's how I see it anyway, right? I'll bet on that right now. The VIX is telling me the same thing, right? And we went over this earlier. The VIX is starting to sink to new lows. No volatility there. You're getting NASDAQ volatility making new, like nearing making new lows. You're getting bond volatility breaking low. Oh, I didn't even see that. Bond volatility is literally rolling over. This means the bond market is healthy. This means there are buyers for the treasury market. This means that although you hear the bond market's going to collapse, the treasury, no, if it was going to collapse, you'd see this spike. You'd be seeing the bond volatility spike like we did back in March. Okay, this was because you're having the collateral at risk. That even though yields are still high or bonds are still low, there is a buyer in the market, right? Or else we would be seeing that volatility go higher. Triple B spreads, credit risk is falling, nothing too big there. And we went over this earlier in the stream. If you want to look back, it's on YouTube. If you want to subscribe and just read the newsletter, all these charts are in the newsletter that I went over. Link is in the bio, link is in the description. So S&P looks solid. If you go to the Qs, I mean, I think the Qs start to outperform here. We saw earlier that who's outperforming now in the S&P 500. It's technology, it's big tech. I think mega cap tech starts to lead again. It's building materials, so ITB, home builders are starting to come back up, and you're also getting SMH, consumer discretionary. That's not discretionary. Here you go. You're getting consumer discretionary. You're getting communications move up. So tech, building materials, and energy. And here's the other thing: people think oil. I could be wrong about oil. I think it's a macro risk from a CPI perspective. But if oil goes up, energy prices go up. You also kind of get, how do I say this? You also, S&P earnings can go up also when energy's up, right? Consumers keep spending at the pump. So their money goes from buying services, maybe saying, okay, let's ease off on the services. Let's ease off on the consumer spending. We got to make sure we pay our student loans, right? Some part of the population. And we've got to pay we still got to travel for a job, right? And if energy prices go higher, then S&P earnings are still going to be improved on the energy sector. A lot of Wall Street analysts are bullish on energy. I'm not interested because I think hey, Peakbot, do you sell any options? Yeah, if I need to, I will. So I think this is bullish for Tesla because as energy prices go higher, the cost for an ICE vehicle goes up, and the cost for an electric vehicle keeps falling, right? I think it was like some guy was showing that to fill up his gas tank for 100 miles, it was like $22. 100 miles for an EV was $3. It was $3. And you can make all these different comparisons, but the fact of the matter is that EVs are going to be cheaper. The average Model 3 is like $30K right now, right? The average car is about $45K. The Camry, the enhanced Camry, Toyota Camry is like $37,000. So point being is that incrementally you're getting cheaper, prices, everything. You're getting cheaper electric vehicles. They perform better. Pretty soon you're going to have full self-driving, and it's going to be cheaper to fill up your tank. It's going to last longer. Oh my God, I don't want to take 5-10 minutes to actually do that. Well, they're setting up Tesla charging stations with food, with grocery store, with movies, with entertainment. So, it's a good experience when you go to fill up your car. It's going to be weird at first, but for some people, they're going to love it. You also have Cybertruck coming in on the fourth quarter, right? Somewhere between third and fourth quarter. That's a huge, what do you call it? That's a huge cocktail catalyst right there. This is the cocktail catalyst for Tesla. Full self-driving subscriptions, electric charging station subscriptions, because we do know that everybody else is saying, okay, we're going to go to the Tesla standard. And then you have the Cybertruck coming online. And there's more interest in the Cybertruck. I'm going to talk about this on Monday, by the way. I'm going to go through all the catalysts for Tesla on Monday stream, because there's not a whole lot of macro data. There's a lot of interest for Cybertruck. So this is going to be a big one here. Just thinking about energy in general. S&P earnings are going higher. Amazon's coming out with their new AI for marketing I can't even explain. I don't know AI that great. All I know is that AI is still making its way through the system. We saw NVIDIA's earnings were pretty good. So you got that in the pipeline. When you jump over to crypto, the whole story is about tokenization right now for crypto. And I'm saying this, some people might get annoyed, but I'm going to keep telling you, Chainlink has the best fundamentals as a crypto project. The future of tokenization of everything, right? The tokenization future is the future of tokenization, right? You're going to tokenize all assets at some point, and Chainlink is the protocol to make that actually happen. This is the protocol to make tokenization actually happen through CCIP and through other Oracle networks networks in general. So when you hear blockchain, right, you always hear blockchain is good, but not crypto. Well, Chainlink is blockchain. Chainlink, crypto could fail. Bitcoin and Ethereum could fail. I don't know about Ethereum, but Bitcoin could fail. Chainlink would still work. Actually, I think Ethereum could fail and it'd still work. I'm not sure. And when I say fail, I mean it just doesn't go up anymore. There's no use cases for smart contracts, but Chainlink can still be used from private to public blockchain. Swift just was successful in implementing Chainlink to actually move tokens around, right? To move tokenized assets, tokenized bonds, tokenized equities, tokenized collateral around to other central banks, right? So these experiments are happening. And so when you hear Larry Fink, right, when you hear these central bank digital currencies, they're going to need a protocol that can actually make that happen. And Chainlink is that protocol. So a lot stirring up in crypto. The funny thing is you don't really hear a lot about it. Do you think Chainlink will go past 100 in the bull? Oh, yes. Spike, I think 100 is Spike dodgeable. I think 100 is my lowest price target. So you guys want to hear price targets? It's not really great. Good thing I don't have a big following, because, you know, when you set what I've learned is that when you set a big price target, and a lot of people follow, usually it doesn't happen, right? But if you don't say anything, it usually goes up a lot, as in people don't understand how high a crypto can actually move. But if you set a lot of price targets, then people expect it to go higher than it actually does. And you want to factor in the technicals, the macro at the same time. So honestly, I don't like price targets, but I'll show you the Fibonacci retracement, which is a very good tool, right? And well, let's just go back. Let's see what the Fibonacci did in the past when it came to Chainlink. So in the past, Fibonacci retracement, you're going to take the high, you're going to retrace it to the lowest low, right? So this is, if you want to see the technicals, you're here, it's on YouTube, you can come watch this. So the high on Chainlink and early in January 2018, this is a new project too. You're getting in early. Most people don't know about it. $1.45, right? Came all the way down to 16 cents. Fibonacci retracement at the highest peak, and the lowest peak is usually about blue. The 1.618 is usually the high. That's the lower limit to the highs. And the red, or the 4.2316, usually you never get there. So it surpassed the blue. It got all the way to the purple, 3.618. That's a big move. I mean, forget percentages. People want to, measure in percentages. We all know as the market cap gets bigger, it's not going to make as big of a move, right? I used to make that mistake with crypto and say, oh, it's going up 2,000%. That means it's going up 2,000%. No, it's not going to go as fast as it used to. The market cap is harder to move. But Fibonacci is a really good tool to use to get like a gauge on how far it can go. So how about the next cycle, right? It peaked at $5, came down, and that's kind of where we're at now, right? You're buying at prices from 2019. This is insane. And this is not the same project, right? This is a crazy project compared to 2019. Drop down to 142. Your Fibonacci took you to 4. For the higher limit it actually went past the higher limit. So it went from a low of $1.50 basically to $20, right? It went past it. Very powerful move there. On the next cycle, let's go to the next cycle, right? This was kind of a mini cycle. So this next cycle, you had Chainlink go from $20, retrace down to 7, and then it went about where it should go. See how it's going lower and lower? It went to $52. Right. I remember I was like, dang, this thing is moving. So I went to $52. So if we take that Fibonacci today, right, this is not a promise. This doesn't tell you where the price is going. It just gives you a relative average. Or if you want to stay safe, go to the golden pocket, 0.618. That's the golden pocket. It should come back to 34 for sure on the cycle. But if you get this tokenization news, this is huge, right? This is huge for tokenization. If the world is trying to tokenize everything, if all the central banks are trying to tokenize everything, you're talking hundreds of trillions of dollars needing to filter through the Chainlink network. Now, it's really hard to understand how a company makes earnings or how crypto has earnings to some degree. That's going to be more complex. Most of you don't even know how Apple makes money when it comes to the actual details of iOS. You just know it makes money because people buy it, right? But this is a B2B thing, right? This is a business to business thing. You probably don't know how Salesforce works. Well, guess what? This is B2B. Businesses will need to use this to tokenize everything, right? So what do you got here? Oops, I messed that up. What do you got here? You got the highs at 52. We retrace back down. We hit a low of like 490, right? So 51% gets you at 34. Being conservative, $83. mid 130, and my thing is we're either going to 100 or somewhere around. I think we can go to 250. I know this sounds crazy. If we just have a normal cycle, I think Chainlink goes to 100. Just a normal cycle, it goes to 100. If if the technology is realized and you get that crazy FOMO, we're talking 250 in my view, right? Which is the upper limit of the Fibonacci. It's a little past, and I'm saying 250 because it's a whole number. It's easy to, kind of pinpoint. So I'm thinking somewhere between 150, right? Upper limit 150 and 250. Now that doesn't mean it's going to stick out 250. It'll probably jump to, let's say it jumps to 150 and it comes all the way back down to $50. That's typically what happens. It comes back down to where it was, but that's a big move, right? $5. You're looking way out into the future. Tokenization is way out in the future. So when it comes to investing, like trading is one thing, but when it comes to investing, if you get in on something that can do a 20x, 30x early, and it has fundamentals, it's not, oh, because this guy likes it or because these people are trading it. This is an infrastructure being used by Swift. Okay, this is being, and I'm going to do more on this. We're probably going to do a whole analysis on Chainlink. What do you guys want to see that? What is Chainlink? What does it do? 250 does sound insane. What would 250 do? That would take the market cap. Let's see if that's unrealistic. I think the market cap's like 3 billion. So 250 would take the market cap to, let's see, a 10x would be 30 billion. It'd be about 30 billion. And then maybe not on this cycle. It really depends on Bitcoin, right? If you get the Bitcoin ETF, which would be the most money that's ever flown into Bitcoin, that's where you get a super cycle. You're getting the most money ever flown to Bitcoin, hedge funds, retirement funds, right? They're all going to be able to access Bitcoin. And that's why I think there could be this could be the biggest cycle. The last cycle stalled because of inflation, and you're at the very bottom. So anyways, 10x, let me see, a 20x, which would be $60 billion. So this would be about a $60 billion market cap. I think it could get to 60 billion. Somewhere around 60 billion. If it is the next, if it's that coin, it's that guy, right? It's that coin. If it's that coin, it can get to 60 billion. You have a super crazy cycle, and Bitcoin goes wild, Ethereum goes wild, everybody loves it. The growth rates are going up. You get it to like 250, but let's not go to 250. Let's say conservative. I'm going to say it gets above 100 for sure. Definitely gets above 100. That's my prediction. Yeah, that's my prediction for Chainlink. So a lot of fundamentals back behind that. You also have proof of reserve, so proving that an entity has the assets or has the liabilities that they say they have, which is going to be needed in the crypto space because you can be fooled 24/7, right? And CCIP does a lot of stuff. It does connect private to public blockchains. Looking forward to that. Another way to track it, link to ETH, right? It doesn't look that great, but link to Ethereum. This is like the Bitcoin ETH. You want to look at this too. So I'm looking at these to see if it outperforms Bitcoin and Ethereum, link/BTC and link/ETH. If we go through the whole cycle and it doesn't outperform, then I'm going to say, okay, nah. But if it outperforms Bitcoin and Ethereum, I think it can hit that 150 mark. I think it get up there to that 150 mark. That's my view on that. So, I think those are the numbers. Let's see. Altcoin market still has room to run. Let's refresh on some of the trades that we talked about on this channel. I'm still looking at Zoom. Okay, Zoom looks really good. It's still wedging here. It's starting to pick up. Oops. Starting to pick up. Now, here's the beautiful thing about Zoom. Basically, the only guaranteed 10x, 100%. Here's the thing about Zoom. And I got to have you on, Isaiah, to explain kind of how we did Palantir Explained on the channel. If you guys don't know what Palantir is, on the YouTube channel, we have Palantir Explained by Amit, Palantir YouTuber. He explains what Palantir is. So over here on taking a look at Zoom, watch this RSI. Look at this RSI. This is very bullish divergence, which is why I see Zoom really making a big run. The fundamentals are great. They have very good fundamentals. The only thing knocking them is that Wall Street, is probably nervous because ARK holds them, number one. Number two, because they're competing with Google. That's it? Not Google. I'm sorry. Yeah, Google Meets. Is it Google Meet or Microsoft? Not Azure. Microsoft something. Some other type of Zoom network. And the fees are kind of high. And it looked like corporations or businesses weren't renewing their contracts because they said it was a little too expensive because it does have, now Zoom has competition. Other than that, all the fundamentals are great. Revenue's up. They have billions of dollars in cash flow. I'm waiting for Zoom to come out and say we're buying back some stock to create more scarcity in the price. Once they buy back more stock and create that scarcity, that's going to push price higher automatically, right? Zoom has a long way to go. This bullish divergence on the weekly chart tells me we're going to have a big upside move eventually. I think it quickly moves to 89.90, and then if the market is still chugging up, if the market can get to all-time highs, I think Zoom goes to like 120, right? If the market moves back to all-time highs, and basically that's why it's all about the macro backdrop. That's why we have these lives to talk about the macro, because without the macro, most of stocks and crypto aren't going to do anything. You need the macro to improve, and we're tracking that, right? We're giving you real-time data on the economy, on the macro forces, the technicals, right? Who's giving you all that? The S&P fundamentals that are improving. That's probably the biggest bull market sign right now. EPS estimates or earnings have been in recession for the past 2 years. Now they're starting to lift. Analysts are now lifting those expectations, driven by, I want to say China liquidity, but driven by fiscal spending, by government spending, and by stronger than expected consumer. All right. Also like Teladoc, but Teladoc has bullish divergence also, but Teladoc's pissed me off. They're still a little more behind. This is more of a risk play here versus Zoom, in my view. But they could have a good catalyst. We'll see how that does. If Tesla outperforms, ARK Invest outperforms. If ARK outperforms, the ETF drags up Teladoc. It drags up Zoom at the same time. I'm a growth momentum investor when it comes to it, swing trader. So I like these type of moves because they're the biggest moves as long as the fundamentals are in line, right? You got to have a stop. You want to know when you're out. You got to take the right play on it. What up, Big Man's coming? How's it going? Big Man's coming. Yeah, let's go. Still want to sell off to give me a good buying opportunity. What are you looking for? Big Man's coming for Zoom or for Teladoc to get you a buy? Tesla also, look at Tesla's in this trend. Like, man, this is a very bullish trend. If you look on the weekly, right? This is funny. This is what people, this is how you align the fundamentals with the technicals for Tesla back here, right? When it dropped, kind of like this. Look at these drops are very similar on a technical basis. Very similar drops. Why? Because the RSI on the weekly chart went extremely oversold. Okay, same thing here. Extremely oversold. I actually signaled this 6 months ago or however long it was ago. I said, this is a buying opportunity for Tesla. Nothing has changed about the business. It's just, a lot of technical and fundamental stuff, or technical stuff that's changing. So you got that big move, right? Now the RSI, starts to move back up to the highs. And on a weekly basis, we pulled back to the middle. So we're here at the middle, right? And the middle is sort of about right here. We're still consolidating. Once we break the highs, right? This was the pandemic, by the way. The pandemic drove this down. Once you break the highs, I mean, Tesla rips. There's a lot of shorts. There's a lot of believers who are scared to pull the trigger. There's a lot of non-believers who are shorting, and full self-driving is going to, I don't want to say that word, is going to outperform every other OEM. That revenue is going to increase, EPS margins increase with full self-driving. Not only that, the energy storage business. Right now, Tesla is the #1 energy storage company in the world, passing BYD in China. Energy storage, storing solar energy, changing the grid, changing the future, and that will be bigger than the EV business. So when those expectations start to meet, right, and align with the macro, and align with the technicals, and align with the fundamentals, Tesla's going to explode again. Those are all good buy. Oh, you like Amazon? Amazon, yeah. AWS. I don't know how to explain Amazon that good. I'm more understanding of Tesla's fundamentals, but Amazon does have the AI. They have a monster AI, and because I mean they know all of your guys' buying habits, right? They know everybody's buying habits. ZM, Baba, a lot of great buys, 100%. Oh, Baba too. Baba's probably going to benefit a lot from that Chinese stimulus, right? That Chinese stimulus that's coming, that's been coming on. I say ETH 20K. If we get ETH as a commodity, then we get an ETF. Yeah, ETH 20K. What does that look like? Let's see some ETH. Let's do some Ethereum, right? Because I'm still very bullish on Ethereum. I think Ethereum outperforms Bitcoin for sure on this cycle, and there's a lot of ETH holders. So we do the Fibonacci retracement on ETH. Let's see what that looks like. Is this the Fib retracement? Where is it? Here we go. So for ETH, we're looking at, let's get rid of the RSI. We're looking at the Fib, the golden pocket back to 3,400. That's pretty conservative. We get back to 3,400. Let's say the macro doesn't do that well. What would be the headwind in the next 6 to 12 months? It would be a recession. So as the Fed cuts rates, or not cuts rates, as inflation comes down, the economy cools, liquidity takes Ethereum and crypto higher, but it may get stuck if we have a deep recession. It'll get stuck at that 34K level. That's probably the golden pocket. I don't want to say what the golden pocket is signaling, but that's a good spot where there's a lot of overhead supply, right? But let's say the macro improves, gets better. There's a small retracement, small little recession. The Fed cuts rates because inflation comes back down. Productivity picks up via AI. Ethereum takes off. Your lower limit is around 7,800. Your mid limit is around 11,000. And your upper limit is 20. Yeah, about 20,000 is the upper limit. And like you said, what did you say, Isaiah? That is if it becomes a commodity. Because here's the thing. These catalysts are decisions made by politicians. These are not like guesses here. ETH is a commodity. Bitcoin's a commodity. ETH is, it's all about regulation. If there becomes an ETH ETF, there's a lot of them being put forward, and it becomes, a commodity. This thing is going to explode too. I mean, it has a use case where Bitcoin's a store of value, right? Bitcoin is more a store of value. Ethereum is a global platform. Chainlink was built off Ethereum. All the decentralized gaming is built off Ethereum. It's the #1 Web3 infrastructure to build any type of smart contract or blockchain off of. It is not going to need Solana in the future. It's not going to leave these other L2s. It won't really need them if it executes correctly, meaning it just swallows a whole lot of value. It is a new system who will be accessed, by the way, by the central system, right? Crypto is changing the way we thought it was. It's not this this system where it will not be touched by centralized finance. It looks like they're going to merge together. Chainlink, by the way, merges that because you obviously want, and you can think of it like, look at Tesla's technology. Other OEMs, other entities are now licensing. They need, for them to survive, they got to license Tesla's technology. Same thing with the central banks, right? Central banks, commercial banks, anybody who wants to build a new banking system with digital assets, with blockchain, they're going to have to dip into and connect to the Ethereum blockchain. That's what makes it so powerful, is that it's not by itself. It doesn't take over everything. It doesn't become the Apple, Amazon, Google, Facebook that we thought it was, but it merges with them, and they benefit each other, creating more productivity, making things cheaper, making transaction settlements instant, creating more. There's a lot of use cases here that, it's really hard to understand in finance. Amazon's AI is for commercial use, where Tesla helps build their core product and can be used for commercial use as well. Okay, so the AI is for advertising, okay. Yeah, so I'm not too privy to that. I need to read more into it. I heard a little bit about it. It sounded pretty powerful. I mean, I would like that. Imagine the AI helps me to make my purchases on time because it knows when I purchase certain items. It knows what items I want to see. Who knows? We'll see how that works out. But anyways, if you guys, any other questions before we come off here, we will be doing a fitness live on TikTok at 7 p.m. Eastern time. Maybe we do it a little earlier. You just look out for us if you're on there. If you're on YouTube, follow the TikTok. Should be in our description on our bio. So we will be talking today about the mistakes you're making in the gym, right? The mistakes you're making to build muscle. The small mistakes you're making to build muscle for hypertrophy. What mistakes are you making for hypertrophy? Over here, changing it up a little bit. But yeah, that's all we're going to do. Leave it with that. Ethereum, hey, we're getting close to the end of this cycle, man. The Fed is close to pausing here. The biggest risks are that oil keeps going higher. I know it's breaking out, but we need to hold the 83.50 level. It may not hold, right? So what do you believe? Do you believe we're going into a recession where things are slowing? Is the consumer slowing, or are they picking up? Nobody knows, right? That's why we track it. My view is the consumer is slowing down. The consumer is not, they see those gas prices and they're going to stop traveling as much. they do move their spending somewhere else, going into maybe back into goods because goods inflation is coming down, and also because you're headed into the holiday season where people buy goods for other people, right? So I think goods catch a bid again. I think manufacturing starts to recover. Did we miss the ISM? No, we went over the ISM. Manufacturing starts to recover. Services ease down. Core maybe doesn't drop as fast as we thought, unless there is some deep recession or some sideways recession. But hey, if unemployment gets to 4%, the Fed is done. If it gets above 4% and inflation gets below, when I say inflation, if oil comes back down, the Fed's gonna cut. They're gonna cut. It's not bearish for the market. You know what? I'm going to go over that really quick. Everybody thinks, oh, it's so bearish if you cut. I showed this on Monday, but it's just not true. It is just not true. I got this ready right here. Let's go to the Fed funds rate. This is the Fed funds rate, okay? Here on YouTube. Here's the Fed funds rate. Okay, what happened when the Fed cut rates here in 2019 of December? The Fed cut rates, right? Here's your rate cut, or I'm sorry, here's your pause. Here's the pause. What do you get? The market went much higher, like 28%. Well, actually, it was about right here. They paused, and then they cut rates, and the market broke out to all-time highs, right? Actually, you know what? It's kind of hard to see. Let me drag it down a little bit. There you go. Now you can see the market went to all-time highs. It bottomed out on the pause, right? Bottomed out. Here's the pause. Here's the sideways action. The Fed is not hiking. Market goes to all-time highs. They cut rates. Market makes all-time highs, right? What was this? Why did they cut rates here? Well, this wasn't the rate cut, you know, and they also paused here and the market still went up. This was a black swan event. Hey, if we get a black swan event, yeah, we'll drop a lot higher. Consumer slowing. I agree 100%. Looking for a 10% drop on the overall market. Sell the rumor, buy the news. Okay, prayer kid. Well, keep on praying because you're going to need a black swan to drop 10%. Yeah, you're going to need a black swan for that, prayer kid. It's okay, and that's fine. It's fine if you believe that. But yeah, rate cuts are not negative. Okay, let's go back to the last rate cut. How about 2008? Well, 2008, here's the difference too. When the market's at all-time highs, that's a totally different, you know, outlook than coming from the lows, right? When you're at all-time highs and you pause, well, that's because something is not working here. And this was the ISM, what we talked about bottoming. The ISM was peaking and dropping drastically. So future expectations of growth were coming down. That's why the Fed paused here. And then you had the rate cuts because the economy's trajectory was much lower. So that's what caused the rate cuts. We're coming from the lows. When you start cutting from the lows, where you see literally the rate cuts here, right? Once they cut rates all the way down, then the market could bottom. So it depends where the market's coming from when it comes to rate hikes, okay? Or rate cuts being a negative. We can even go back to, man, there's so much history here. When I hear people say that rate cuts are negative, they're zooming so far back. And then they're just pointing out an area where there's no details. They're not showing the US dollar. They're not showing the manufacturing activity, or they're not showing economic activity. They're just showing the rate hike. They're not showing what it is, where it's coming from, why it's happening, right? The market is bottoming now. The earnings trajectory is going up. Fiscal policy is coming online. Inflation's been dropping for 9 months. Now, oh, it goes up 1 month. Okay. Maybe it goes up for 2 months. Okay. On the headline, but the core is still falling. Shelter still has room to fall. Rents are falling, are collapsing. We know that. There's a lot of supply coming online for apartment rents. So shelter will continuously fall because it's so laggy, and that's going to bring down core. I think core goes to 2, possibly 2% faster than people actually expect. I don't know exactly when, but I think it goes that far. So you can see these are the rate hikes. Okay, or these are the pause. This is the pause. This is the cut. The market goes higher. Okay, the market goes higher typically when it's at a low point. If you're at a high point, then that's a different story. But we're coming from the lows, and the optimism is picking up. A lot of people are still in cash. They're still holding cash. So what does that tell you? If they're still holding cash, like a lot of you, they're saying, I don't know, I'm in cash. Kid, other way around, up 10%. I'm with you, Doug. I think we actually go up another 10%. As a matter of fact, we're almost close to the all-time highs on S&P. All right, I better shut it off there. I got some other stuff to get to. Anyways, appreciate you guys jumping on. Stay blessed. Have a good weekend. Stay fit. And we'll catch you on Monday for the Tesla We're going to go over the Tesla catalyst and the crypto catalyst possibly, and because there's not a whole lot of macroeconomic data. Anyways, you guys stay blessed. Have a great weekend. Love you guys.